Hello and welcome to the Privacy Podcast. I'm Ben Schiller with Maiden, and today we've got a very special episode with Nikhil from Predicate. Welcome, Nikhil. Predicate is a key partner of Maiden and company we work closely with, so it's great to have Nikhil on the show. He's comes from the on-chain space with Celo, where he was head of strategy and innovation. He also comes from a policy background at the Atlantic Council, which we're definitely going to ask him about. And he also has an MPA from the Harvard Kennedy School and a degree from Wharton as well. So he's highly intelligent and highly experienced in our space. So thanks for coming on the show.
Yeah, thanks, Ben. Great to be here. Appreciate it.
So let's go back a bit because we've both been in the space for a little bit. I just wanted to ask about your experience at Celo and what you learned there and how that led to you forming Predicate, because I think that's an interesting kind of pivot that you did. When was it when you were at Celo that you thought we really need to have something like Predicate, and when was it that you thought we need to be the guys to build that?
Yeah, at Celo, I was working on a number of kind of major, like some of the larger strategic partnerships and launches. It was across the DeFi group, but also with some of these more like traditional organizations, like working with Circle, Opera for MiniPay, was doing work with Grameen and Care International and a number of others. And so I think as you start thinking about, crypto and digital assets and blockchains being used not just for speculation, but real financial activity. And I think that was one of the great parts about Celo was like day one, we were always thinking about how do you build financial infrastructure and payments infrastructure. When you start going into that world of, we're actually dealing with, real businesses and real people, those questions around AML compliance start coming up. And how do you start navigating that? And granted, again, this was early. This was in 2021, 2022, 2023, and we're still, all of us across the industry are trying to figure out, how do blockchains become a global financial settlement system? But you can start seeing some of those questions come up. And then I also have I was also engaging still a good bit with regulators, and, regulators are also like, how are blockchains going to be a global financial settlement system? There's all these problems. And so that was when my co-founder now and I were thinking about compliance. And my co-founder was also an engineer at Celo. And he was already building some of the compliance pieces for components that were built by Celo's labs entity for different pieces that we had. So he was already having to do some of it. And so from there, we're like, all right, like someone is going to have to be able to build this at scale in a way that really accounts for and navigates the programmable nature of blockchains and kind of the fact that just things move way faster. And so, yeah, that was when we really started kind of going deeper into it. And then simultaneously, I was then talking to folks in Treasury, FinCEN, some of the like SEC. And I was like, hey, how are you guys thinking about like regulation in the future? And that also informed how we should think about the architecture. So that was really kind of what spurred it, was our experiences at Celo, our experiences working with other companies in the blockchain space, but then also engaging with regulators at the time.
So to put it very simply, I think you could describe Predicate as a kind of a rule book layer that executes with different blockchains. Can you just explain to our listeners how it exactly works and how it plugs into different systems?
So at the end of the day, what Predicate is we are a on-chain policy enforcement system. So what we allow an organization to do is to build programmatic rules that determine whether a transaction should go through a smart contract or not. There's really two facets of that. One of them we call application compliance. And so that is you have a smart contract that's receiving funds, right? Users are sending funds into it. It could be a vault. It could be a kind of an exchange type of system. Could be a privacy protocol. Just the main point is someone is submitting assets to enter into a smart contract. And so for there, what Predicate allows the organization to do is to be able to set pre-transaction rules for what transactions can enter into that smart contract. And you can define rules based off of all different data from different analytics providers. From an anti-money laundering standpoint, you can define KYC, KYB requirements. You can define rate limits. The point is there's a lot of different things you can do, but the main thing really is you have to define a rule or a rule set for what transactions can enter into that smart contract. That's one component. Then we have another piece, which is our asset compliance product. And so for that, we plug in directly into the asset contract, and we can execute automated freezes and restrictions for that asset. So this works a lot for stablecoins. right? So stablecoins have to be able to freeze addresses for sanctions. They have to be able to have other types of manual capabilities for restricting certain addresses from accessing or moving that stablecoin. And so we have a system that basically has an end-to-end platform that allows an asset issuer to say, here's all the different configurations we need for this asset that we're deploying. So those are
Right.
our two core pieces at the end of the day. And we do have an identity product as well that is really a managed service that it is end-to-end KYC, KYB that is fully enforced on chain.
Okay. So we're used to these kind of compliance systems in the regular kind of online world. I mean, how does the challenge on chain differ from that more conventional system?
Yeah, it's different, right? Because in the conventional system, transactions happen and you have custody over those funds. A financial institution, the organization has custody over those funds and they can, take action. Blockchains are different because you don't always have direct custody of the funds. You have smart contracts. It's much more global because anyone can access it across anywhere in the world, and transactions move much faster. So it just means a completely different architecture. There's also the fact of you just have a lot more information on transactions on at least on more public networks on what's happening. And so I think historically in financial systems, you have this heavy surveillance state around KYC, KYB, and all this data collection. You don't necessarily need that in the same way because of, at least on permissionless public blockchains, that public information. And so there's just a lot more of those types of things. And I think the other part too worth noting is also exploits, right? Exploits happen across the industry. And how that manifests in crypto is different than in traditional financial systems because, again, of the speed of capital flow and whether you can then have access to those funds or not after they're stolen. If they go into a self-custody wallet, it's very difficult to get access to that, right? You can only get it at specific points where you have control. In traditional financial systems, it's a little different, right? Because it has to go through correspondent banking system, various financial institutions. You have a lot more opportunities to say, wait, we need to prevent these funds that are stolen funds from moving. And so it's just much faster, much more difficult to respond to. And there are opportunities for being far more proactive and programmatic about things.
A compliance system on chain is obviously downstream of policymaking. So I wanted to ask you about that. We've seen a lot of efforts at the regulatory level, at the agency level, and also at the legislative level with, MISON in Europe and what's called the Clarity Act, which is a comprehensive crypto framework, which is going through Congress at the moment. First of all, do you think Clarity is going to pass this year? And if so, what impact would Clarity have on this policy environment around privacy?
My take right now is it's a 40 or 45% chance that Clarity passes, so a little less than 50%. I think the main reason is just it's a really complex bill, and there's a lot of moving parts. You need to have alignment across both because the U.S. has two components, right? The House and the Senate. So you need to have alignment across both of those, and then of course you have other macroeconomic factors and global factors of just that also have to be dealt with that are entirely separate from crypto, right? And so that's kind of the real challenge there, and it has to all be done in the United States before we enter into a period of election season. So you need it to pass roughly like before August or sometime by like mid-August or so. Um, so that's kind of where I'm thinking, but of course, like doesn't mean that Clarity won't pass. Clarity could still very much pass. And I think the two main bills that you're seeing in the United States are Clarity, and then you had Genius that passed earlier, right? And so Genius was heavy on the stablecoin side, and Clarity is really around market structure and kind of all the different actors. What is a role of various types of organizations as it relates to blockchain and crypto? And then who is responsible within a government perspective for the oversight, right? What is the role of the CFTC? What is the role of the SEC? What is the role of, the IRS, all these different groups? And you have to kind of navigate all those pieces. That's really what the Clarity Act is going to do.
So does it impact this privacy debate, or is it not really relevant to that?
I think it does. It's not like it's a direct impact. It's not so much that the Clarity Act goes heavily into privacy, but it is going into those directions that then makes privacy more and more important, and it has downstream effects at the end of the day. So I think some of the things, right? A more legitimate established crypto industry that is, seen to have kind of the regulatory guidelines and rules in the United States means that you're going to have more adoption of crypto across the board, right? You have more businesses coming in, you have more users coming in, you have financial institutions, all of those groups coming in. And so that has downstream effects on how might you think about privacy. I think it also moves into a world of, and it's not directly from clarity, but you then have this question around how do you deal with the AML compliance? How do you deal with reporting, not just for like payments, but take securities? If you have tokenized securities, there are specific reporting requirements that an issuer has to do as it relates to a security. How do you do that on a privacy network? Completely different, right? You have to still have that information. How do you do it there? And so it opens up those kinds of things. I think same downstream effects of stablecoin regulation. Again, what happens when payments need to be done privately? How do you do that in a way that meets regulatory requirements? So it opens up that piece. And I think the two kind of components you're seeing as part of that is, the Bank Secrecy Act. So that's been quite prevalent in the United States, but there's also been questions around, is the Bank Secrecy Act need to be, tweaked a little bit and modernized? Does the Bank Secrecy Act perfectly work for not only crypto, but more generally for payments across the United States and the globe? Because you just have had technological innovation that the Bank Secrecy Act had not accounted for. So I think there's like an entire opening there. And then obviously SEC Commissioner Peirce has talked about the importance of privacy as well.
Right. So just to catch you up a little bit, so I think the BSA, the Bank Secrecy Act, was a 1970
1960.
act, and it put a lot of reporting requirements on financial institutions to get information from transactors and to report it. So a lot of people complain that it's highly onerous, that it's discriminatory, and that it really puts a lot of gatekeepers into the financial system. That's fair to say, probably. So what would be the process by which the BSA might be reformed? I mean, is there a kind of a coalition building in DC to do that, would you say?
Yeah, I think there's a lot of organizations who are talking about BSA reform, and that is done more so by some of the regulators than purely by Congress. But it is kind of this question around what all do you reform, and what are the pieces, and how can it be reformed to be able to meet a more modernized financial system? And it goes into the world of like exactly what we're talking about, Ben, of like what is that surveillance that needs to be done? What is the data collection that needs to be done? There's this entire question around financial institutions today are required to file what are called suspicious activity reports. And it's really if they see some type of suspicious activity that they inform law enforcement, they inform regulators. But you've seen this explosion of reports that really makes it at the end of the day not feasible to be able to really determine and navigate as a law enforcement or as a regulator what to do with all of that. Like just this has been an absolute explosion of them. So then the question is, wait, like how effective is all of this at really minimizing and addressing money laundering and illicit finance? And then on tied to that is also this question around surveillance, right? Like we are all supplying data, our personal identifiable information for all these types of, regulatory structures, but that also creates honeypots of information. And in a case now where we're seeing with AI, like exploits, data leaks are just more and more common, which means that our personal data is more readily available to malicious actors. And so again, it's a question around like how effective is the Bank Secrecy Act? How can it be reformed to be able to meet today's modern financial system?
So it's been interesting to listen to the SEC, and you were part of a privacy roundtable at the SEC. I think it was in December. Yeah. And I was rereading that this morning, just to prepare for this. And Paul Atkins, as chair of the SEC, made a very interesting speech where he said if we get regulation of crypto wrong, then it could become, quote, the most powerful financial surveillance architecture ever invented. Which is quite ironic, really, because obviously one of the premises of crypto or blockchains is to provide this privacy and anonymity when we're doing business on the internet. So where do you think we are on in that kind of continuum between the cypherpunk privacy dream and this kind of overwhelming surveillance system that we could be creating almost inadvertently with these new systems?
Yeah. My early interest in crypto when I first came in was on payments and on privacy, actually. Those are my two interests. And I think we've kind of forgotten some of that early component at times in the industry. Like, I think we've forgotten all the surveillance that was done by, by social media platforms. Like, we've forgotten about Cambridge Analytica and all the questions there. And like, the ethical questions and the dilemmas that we have created these massive surveillance systems based off of our internet activity. And we're just readily supplying more and more of this information on everything we do online. And I think blockchains only can further that if done poorly. And I think that is what Paul Atkins is really referencing, right? Is you now have these transparent ledgers. So not only are we linking all of this different information we have on our different internet activity, you're then tailoring that with our financial transaction activity as well that's fully public available. And yeah, this is only as the data of every single person that's now public. We really kind of lose out whatever privacy we have. I agree, which is why I think privacy is critical, just not only from a payment standpoint, but from like a humanity perspective. And so I think how this really shapes up my view is that blockchains, as they become more and more adopted, right? And this is why something like clarity is important. You naturally start having to think about some of the privacy questions, even from a business perspective. I think there's a cypherpunk position, but I think there's also the business angle. And I think the opportunity for where privacy adoption comes more heavily first is perhaps more on that business adoption. And the reason for that is businesses already have some kind of privacy guarantees in their financial activity. And so they need those to be maintained. Now, ideally, you have that where it's like from a user perspective, they're also able to get the privacy that they need. That way, you're able to kind of have all this global liquidity really sit within private networks rather than saying that everything is public. My take is as blockchains become more and more adopted, privacy becomes one of those critical pieces to allow for all of this to exist in the first place. And I think people do care more and more about privacy than they did in the past.
So the kind of premise of zero knowledge proofs is this idea of selective or programmable privacy, where, you know, the classic kind of example people use is, you know, when you walk into a bar, you don't have to reveal your whole driving license. You just need to prove that you're over 21 or whatever the requirement is where you are. Do you feel that this world of selective disclosure, programmable disclosure is congruous with this new regulatory environment that we're building? Are the regulators open to this new type of technology?
Yeah, I think that is a direction that a lot of people are thinking about. I think it's just how does it shape up and where does that adoption happen? But I think regulators are thinking about this, where it's okay, great. Like, do we need really what it comes down to what is a problem that we're trying to solve for, right? Like, is a problem that we're trying to solve for mass data surveillance from a regulator perspective, or is a problem that we're trying to solve for, investor accreditation, knowing that a user that an investor is properly accredited? Is it, knowing that a user is not malicious and affiliated to North Korea or Iran? I think that's really what a regulator is thinking about. Now it's making sure that, that factually, truly from a product perspective, that you can solve those things with the zero knowledge proof. And then I think it's then that adoption on the business side, right? Like businesses have to use this. And I think this is my take right now is I think there's a regulatory, like the regulator world, are they comfortable with, something like an investor accreditation via zero knowledge proof? That's one. But I think similarly, it has to be adopted by companies. And I think you will have vested interest against that, because I think we've also historically operated in the last, 20 years with tech companies who are incentivized to collect data, with financial institutions who are also incentivized to collect data, because that is not considered a liability. That is considered an asset. And so now you're suggesting that with zero knowledge proofs, you lose that asset. And now it is no longer an asset, right? And so those are the things you have to navigate. So it's both the regulatory piece of, oh yeah, the SEC is comfortable with a zero knowledge proof for investor accreditation. Great. But then you also need, financial institutions and tech companies to say, yes, we will actually implement this and accept it on our end.
Right. So I mean, really what you're saying is that, so the surveillance doesn't just come from the BSA, it comes from the business model of companies on the internet. So we have to kind of get around the business model problem as well as the regulatory problem.
Either you get around it through the business problem, or again, it's then it's a question around a collective action issue, which then requires explicit regulation from the government, right? Saying that, hey, financial institutions, you actually are now obligated to not collect this data, but instead rely on zero knowledge proofs, right? Like that would be a complete paradigm change. But something like that takes a lot longer from a regulator perspective. But there's two worlds: either businesses adopt it and then regulators say, yeah, this is good, or businesses don't and regulators say, yeah, this is now a requirement because the public is requiring it. We were elected, indirectly elected by, and selected by, we elect politicians, they select regulators, they appoint regulators, and now regulators are like, we actually need this because this is a demand from the public.
Do you see that happening from regulators or from politicians, pushing for that kind of change?
I think you're seeing some of it. I don't know yet. It's more just I candidly don't know like what is that timeline and what is the best approach. I think a lot of people do care about privacy. I think more and more businesses are caring about it too, because I think they see the risks of the data collection, right? It is now, is it still an asset or is it now turning a bit into a liability? The more and more it turns into a liability, then that also changes the calculation, right? If it's a risk from a business perspective of the compliant, you collect all this data, but now your compliance team is like, wait, we have to manage all of this. The legal team is like, we have to manage all of this. If there's a data leak, now you're on the hook for releasing all of that data. Now that turns into a liability. So you are seeing that transition. I just don't know how long it will take, but it does feel like across the board, people are thinking about it more.
If you had to create like a dream wish list of regulatory interventions you would like to see in order to push forward this privacy agenda, what would you say they are? I mean, there could be stuff in Congress or stuff at the agencies.
I think it'd be on the agency side. So I think it's, I think it's, more articulation, recommending, or I'm going to say, like basically encouraging businesses to adopt uh, ZK technology from an identity perspective, accepting those credentials. I think that's one. I think the other one is on stablecoins, some guidance around, okay, great. So how do you think about compliance for AML CFT compliance for stablecoins operating on private networks? Like right now, Genius has remained entirely quiet about privacy, just because it opens up another can of worms that I think they'll figure out later. Uh, I think the other one that we talked about in our comment letter recently to Treasury was asset issuer discretion. So asset issuers are the ones who are the ones who deploy assets, not the permissionless privacy protocols. And so the asset issuers should be the ones who are responsible for thinking about AML CFT compliance and having the discretion to determine what to freeze and what not to freeze. It shouldn't be on the privacy protocol. It also shouldn't be on regulators to be like explicitly, here's what everything you should be doing. The asset issuer should have the discretion to say, these are things we need to take action on. These are things we shouldn't take action on because we believe in market integrity. I think those are the kinds of things that those are like my wish list. That's my wish list at the moment.
Great. I mean, it does strike me just talking with you now that, we're in a state of flux in terms of a lot of these issues. And I'm just wondering how you cope with that complexity as a business leader of a company that's trying to kind of mediate these different types of players. You've got very different kind of companies coming into the crypto space or the on-chain digital asset space. How do you deal with all those different types of actors and the policy risk involved with that?
Yeah, I think the way we take it is just deeply understand what they're trying to solve for, and then like really what is the best effort around those things. You won't have all the answers on day one, but it's trying to drive some common standards and approaches that different organizations can take around kind of if they're doing the same thing. It's like, okay, great. Like, how do we actually take a common approach to this rather than each one having to do something different? And then I think having an intentional approach with the knowledge that some of this might have to change, right? And so, but I think not saying that, oh, we can't do anything, that's usually disingenuous. There's many things that one can do. So what are those different pieces? And I think that holds both from the industry perspective around what do we build? What do we make possible? What do we communicate as possible? And then from a regulator side as well as saying, all right, here's what's actually possible. The challenge is if we go and are disingenuous and say, oh, these are things that are not technically possible, or these are things we don't believe, but we, in the back of the mind, know that it is going to be required. We're being disingenuous. It slows down everything. It only creates more chaos. So the better we are at saying, with intention, here's what we believe is a right way to do it. I think that moves the needle significantly.
Are there any particular places in the on-chain economy where you see these things being adapted first or adopted first?
I think we're seeing a lot of move on the stablecoin side, particularly around like how do you build kind of just better, more institutionally oriented, and just stablecoins that are better designed to operate in a global financial system. So we're seeing it there. Starting to see more and more effort by organizations that are building kind of yield products, earn products via vaults. I think that's another big one. And then on the privacy side, I think it has been a lot more around privacy and saying, okay, great, how do we think about this kind of tension of privacy and compliance? And not having it that you've now recreated in your surveillance state, but have it so that can we meet the requirements from a law enforcement perspective without creating a surveillance state? And I think there's an opportunity for, I think you're seeing that of like just thinking of it from scratch, right? Like starting grounds up and saying, okay, wait, what are we really trying to solve for here? If we're trying to solve for, the law enforcement and of preventing terrorist financing, which we all care about, how do we solve for that without just creating a new surveillance state and recreating exactly what we've already created before? I think that's where we're seeing the most grounds.
Well, thanks so much for coming on the show, Nikhil, and we look forward to working with you in the months and years ahead. So thank you.
Yeah, thanks for having me. This was great. And yeah, we really look forward to working with you all as well.
Thanks everyone for listening and watching. That was Nikhil from Predicate, and we'll have another Pioneer in Privacy next week on the Privacy Podcast. I'm Ben Schiller, and thanks very much for listening.